I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CTA's Daily Review. Today is October 30th, Monday, 2023. Hope you had a good weekend here. So we had a pretty much bullish day here in a way. Retracing back, taking out these highs, getting into that open gap of last Wednesday, the 25th of October, and had that gap right there. You can see it on the daily as well. I don't have it highlighted because it's just too much noise, but this was already here as well. Liquidity sitting right there. Inside it, we decided to come up. We did bounce twice from this oversold area on the indicator here, which we don't really use indicators too much, but and just in general idea is that we came pretty low and we're just retracing back a little bit. We did come obviously above the 50 of this totally weekly imbalance right here, and very nice area. There's no bodies here, so we're trying to get bodies closing to seal up that gap right there, right? And this is what I was mentioning on Friday. So watch the previous video so this makes sense. The second option of being bearish, I was saying that we would just literally open up. So we gapped up, obviously, right? We gapped up. Did I show you that? Yeah. Oh shit. We gapped up obviously here, right there. See that with this big current purple? That was the all week gap, and then now that the week's over, it'll turn gray. That's the current one, which is a dark purple right here. And then the lighter purple are gaps, just in case. And then that one, this is a little different of a gap because this is a day opening gap. So that color is just a little bit off. But anyways, so yeah, I was mentioning that we would pop up. So we gapped up just like that. See that big ass gap right there? We're heading for the top side, obviously. And you can see that so gap up here, and then when I do a projection like this doesn't mean it's all happening in the same day, but I'd like to see this kind of pan out. So right now we've all gapped up and we came up to here, right? Took out the top side right there and retraced back and then came back up, but price ended up here. I put this here as an example, that 4-hour imbalance plus with these lows that we broke through. A nice range from here to here. It could be a confluence of 50% right there. I like this area a lot. And as far as Dow, I'm sorry, not Dow. As far as Nas goes, I don't know. Does it come down for? I won't get into that right now. I just wanted to mention that that these are ideas. And if I, as another option of instead of coming up here, we could have just stopped here, right? We have this 38 on this fib from the range from here to here, but really from an algorithm standpoint, we're not concerned too much about the range. I'm more interested in about these specific levels that I'm talking about. This is efficiently delivered, so it doesn't, even though there's a gap right there, it doesn't have to come up there. But here, this is definitely a main target as a retracement coming up. So, and then I was mentioning dollar, that dollar would come down as that option as well, come down to here, and then obviously, again, not all on the same day or anything, but so far this is panned out right here. So as my day goes on, I'll have another idea depending on what we did, right? So far we're kind of in that picture. Let's just keep going here. So then I'll show the trade that I want to explain on Nas, and then I'll go to Dow. And Dow obviously straight up too. So they're pretty much wiping out previous liquidity. These previous highs right here, you can see on the 1-hour chart right here, that's the high of Friday, that's the high of Thursday, and this is that gap right here. Now I don't have it extended out because I didn't want to. I don't manually have this box drawn. This is the indicator that does it, so I didn't want to draw another box on top of it, but I'm going to do it right now just so you can understand this video. 1 second here. Excuse me. I'm just gonna do this. Okay. So you can see it's the same box, but just it stops right there. So I'm adding this over here so you could get the idea and understand the logic here. So again, Nas gap up. Here's a 5-minute chart. We gap up and come above. make a high here, and then make a low here, higher low here, and it does tap the bottom. Sorry, the top of the actual opening gap of this week. That's what this week is. Today's Monday, obviously, so far we're in that. But at 9:30, it decides to push it down and then wipe out previous liquidity, which is a good sign for going bullish. And these yellow lines here, pay attention. These yellow lines right here, this is the opening range gap. So we closed here at 415 on Friday, this level, and then we opened up here at 9:30. That's what these yellow lines are right here. This is what framed the trade for the sell today, well, and the buy technically. So obviously, and another buy that I actually missed right here, that I'm going to explain in a second. So this is just a 5-minute chart. So price retraces, taps that, takes the liquidity, and it does stay inside these 3 down blocks right here. See this 3 down blocks right here? It's a 5-minute. So doesn't go below. But the intention is when you have an opening range gap and it's Monday and we have non-farm this week and we have rates, I believe. Actually, let me push pause real quick. All right, so we do have non-farm on Wednesday with federal funds at 2 o'clock with a statement following probably at 2:30, obviously. So that's going to be a wild week. We have even news. We have confidence news tomorrow, which is Tuesday, and then Thursday has unemployment claims. So there's a lot going on, but the point of this is that we're going to engineer liquidity on the top side and the bottom side. I don't want to get into the whole future price action, but the reason why I'm mentioning that is because today is obviously Monday, so obviously the best trading is going to be Monday, Tuesday, and then Wednesday. It's going to be pretty wild, and you probably don't even want to be trading. So Wednesday, Thursday, Friday is probably out of the picture after lunchtime of Wednesday. So just a common general knowledge of non-farm and federal rates weeks. So this is sort of consolidating. So Tuesday can consolidate possibly, but just maybe extend more ranges higher to take out the previous liquidity, or if it's going to come down from here, it all depends. But you definitely want to get the trading out of the way by Wednesday lunchtime, New York time, Eastern, obviously. So then this price pops down. Okay, it's a 5-minute, and the intention is when you have an opening range, and I know we're here, and we closed Friday as far as the futures goes here. The problem is that it'll generally go the opposite direction. Instead of coming down to fill it and seal the price between these yellow lines, instead of sealing the price, what it'll do is it'll go the opposite direction to wipe out liquidity in previous price action, which are the highs here. We just talked about Friday and we talked about Thursday, these highs right here. Plus we had the gap there. So the price is getting drawn to the gap because we need a body of price. We need a body of candles here from the 1 hour, 4 hour, daily to sit here so it can close up that gap, right? So that logic is framing the buy first. That's what I'm trying to tell you. And once we're up here, idea is to make a sell. This is the main trade, is buying up to this. This is the main target that they're going to, plus that liquidity right there. See that? So with these 3 levels, it's kind of thin. We just kind of, no, that's weird. You can see that, right? So it's because I put this gap through it. So anyways, price went through it, took out those highs, and then once we get here, this is a great time for a sell. You have the candle, you have this. It's a 5-minute chart, not even a 1 minute. This 955 candle, I'll hover it here. You can see that it does not break above that high. So a model just on this time frame. Because this was all caught for me on a 30-second, especially this buy right here, which I'm going to try to explain in a second. But actually, let me go back to this. So you need to see this on a 1 time. I can't show it to you on a 5-minute. It has to be slower. So, but just a general gist, coming up here, coming above, you got a swing high right there. The purpose of taking this sell is to come back and get below the 930 price action to maybe dip inside this yellow range that we have inefficient price delivered from the open range. Plus we also have the liquidity with there and there, right? So this came down and didn't take out that low. And that's another purpose of the buy as well for me, especially if it tapping this gap, the opening week gap, and then never going lower. Reaction is flying back up. So the intention is to take out liquidity and the ones I just mentioned, Friday and Thursday, right? So that being the case, the sell coming back down does come. I was stubborn, and I should have took the profit here, but I decided to just be. I was very confident in coming into the 50% of this range of the yellow lines of the opening range. See I have a fib here with this 25% level, 50%, 25, and it's in dots. So I don't want to have too many lines. So you can see that just to explain it to you when we opened at 9:30 right there. So the 50% level here of the opening range, I was very confident in. What do you have confluence with that? You also have this high 25% of the gap of the opening week. So you could have held it there, no problem. If you would have tried to hold it, now here's another dotted 50, I'm sorry, quad fib. The 50% level here of the actually opening range, if you were to try to wait to sell to that and buy, you would have missed it. See that? You would have been asked out. But here was good. And then here for me, that 25% level, I'm sorry, that 50% level of the range was perfect. So let me just show you that trade real quick. And then you can see here, where is it? Here. All right, so you can see here, this is what, 1 minute that I screenshotted it. On this time frame, you got a little, it's not so much a displacement, but it's a nice bearish candle. It's bigger than any other candle you've seen. And the price does retrace back up in the upper 50% of the candle, does not break above that bearish candle. And that's a general nice entry for me at the 50% level. I did get filled automatically in a confidence trade as far as the actual knowing. See, I didn't stretch out this. I didn't stretch out this gap all the way. If I did, it would have been here. But the logic is to come under here because everybody bought from here, where we did. And I missed this because I wanted to buy this. I'll get that in a second. But just explaining the sell coming back down here. It does come below the liquidity, which this is the main target. I should have took the profit. This is me being stubborn, trying to come and be cool and take a picture right here on this 50% level, right, of the range. I literally screenshot it right when it touches it. I already know that I'm coming down here. Now, obviously, this is the safer place, and I should have done that. I'll be honest with you, but because I knew we would get a retracement to in here, right? And I actually went all the way up here. But the point is that I was confident in this level here, right? So that's why I screenshotted it right here, and I have the TP of this right there, literally. So there's not. It wasn't here or even here. I didn't put this RR range here. I literally put it right there so you could see that. And then when I fucking screenshotted it, look at this is a 1 minute chart. There was 9 seconds left. By the time I right clicked, screenshotted it, took a look, the next fucking candle comes out and it flew up and I missed it. Just like this case scenario here. Now, the reason why I didn't take the buy is because this was playing with me a little bit, meaning that it could have came lower in between this opening range of these yellow lines and sealed more of it. But also number two, I wasn't expecting much for this buy. This is a sell, buy, sell, right? So the sequence still occurred, even if it was bearish or bullish. Still had a buy, sell, buy, which I'll show you in a second. But point of what I'm saying is that I would have took it to here. This big imbalance right here it will tap the bottom of this candle, and that would have been sufficient for this buy just to get this little range real quick. But because this entry over here, this buy, I knew that I had a good range to deal with. I knew I was coming up here to take out the liquidity, and then I knew I had the top of that gap, right? So which is if it was dragged out, let me go to it just so you can understand. Now I dragged the gap out, right? So good range here, and this is the main trade of the day for me personally. And then the second main trade obviously would be the sell here, but the idea was to get up here. That goal is accomplished once we're up here. What did we do? Who made money? Well, we took out the people who made money on Friday and Thursday. Now we're here. Now, why am I selling this? Well, I'm selling this because I know the people who made money here, right? Buying. So coming back in here, not a coincidence. It does come below. And there was something else I wanted to say. Shit. The buy. Yes, that's right. I was gonna forget. So this was actually caught in a 30-second. So I could show you here. I guess I could show you here. But when we're taking this buy, when we're going to take this buy, the 9:30 opens right here, and then it shoots down on this 1 minute time frame, shoots down, and then taps that opening present gap. That's why it's darker than this purple. This is the darker purple for the week, present week. Price does shoot up, so, and I right here I was like, man, this is a good, great buy, but I was trying to let things kind of play out, but it moves so fast, and it's a look how big the candle is. It covers damn near both of them, right? So you have a lot of strength, I should say here, and then the price. I'm going to show you on a 30-second because it's the way I caught it. On a 1 minute, the only way I could have looked at this is that if I drew a inversion imbalance here, you could see that this down candle right here, this down candle gets respected. Once this candle comes up, and I was mentioning to you about bullish candles, when there's strength, they'll close, and then they'll just retrace a little bit and then make a new bullish candle, close the strength, won't even have a retrace here, popped up again, controlling price inside, right? So this is the details that you see with strength and with what you're trading. Our goal is to get up here in this part of the day, right? Again, remember, I'm not expecting it to come down here in between the opening range between these yellow, because they usually will go the opposite direction first to accomplish what they want, then come back for everybody buying and seal some of it. It doesn't have to seal all of it, but I do want to see it come to 50%. And this is the purpose of why I'm telling you that we sold from there to come down to 50% of that range of the yellow lines again. I'm using yellow lines so it's easy, because if I put another box in here, it would just be too much shit. There's too many other boxes that I have here that represent, gaps and inefficiencies. So I'm just doing it this way, right? Anyways, if you look closely, God, I hope this video is short. If you look closely here, you can see that if I drag out this candle right here, this is a 1 minute. It'll act as an inversion and get imbalance right here. Let me put this blue. And you'll see here that once the price is up here, this next candle, it opens, it retraces back right into it. You can see that it's the same exact level here. I'll zoom in for you, like for real, right there. I know I don't do a good job of zooming, but my screen is just big. Right there, you'll see that this retraces, respects. Look how it respects that inversion imbalance. So the purpose of this inversion imbalance is that, yes, when this gets created, it comes down, it goes above it, it comes down, it goes above it, and then it retraces back into it. That's support. This is algorithmic support. So you could also look at it like, in sloppy terms, and you won't have precision. You do go above this here, it comes down, you go above it here again, and then it retraces and it acts as support, which this candle right here, let me delete this just so you could understand that. I'm going to delete this. This candle right here, this becomes a support block, meaning we have a breakthrough and then it retraces back in it and it holds as support. So this is sloppy support right here, but you could use this up candle as a support block right here. So even if you highlighted it, you'll see that while the price retraces back in it, you'll see that it does respect it. These are the ideas that you need as price is moving forward. So, and then I'm going to leave that little blue one because I'm going to show you this on a 30-second. That'll make sense. But you see this candle right here acts as support. Price comes in it. The last lower 50% of it, between the 50 level of it and the 25% level does respect there. So the strength is showing you onto the top side, and nice price action there. So I'll go in a 30 seconds so you can see it, so this makes sense for you more. Now I do want to kind of get to Dow. And then and also with my Confluence, well, I have so many screens on that I'm able to see this as well. So I have a 1 minute screen, I have a 30-second screen, I have a 5 minute screen, 1 minute screen, right? So with this 30-second, was it 30-second? I'm sorry, was it 15-second, right? Yeah, it was even lower. Yeah. Yeah, sorry, 15 seconds. So on the 15-second chart, you'll see here that we had that imbalance right there, and that's the range. That's that 9:30 open right there, literally 9:30 on the head. The first 15-second candle even. Um, but what was more important here to me was in this chart was this imbalance here. We do go above it right here, and then we retrace back in, right? And then it respects. It does not break that candle either, and you're in the races right there. So for me, at the 50% level of that imbalance right there, it comes below it. That's an entry. Stop loss, you can put it underneath that candle. You can put it underneath that candle or 50% of it. You don't want it to see it come below that much anyway, or even that wick right there, or this wick right here, right? So 50% levels of that wick, I wouldn't want to see it come lower than there. This is just a little, this is obviously very fine tuned and all that and detail, but this is just how I saw it. So that's why I'm showing you here. But let me see if that, as far as that sell goes, you'll see that this last up candle here, we get this nice bearish candle. It's a 15-second chart, so it's a big candle right here, and we can call this a sort of displacement. And that doesn't mean that it is a displacement, but in reality, for me, that we have already accomplished this objective above here. We want to come now and take out the people who are buying. So again here, while I'm on the 15-second, you can see each candle, they're bullish and they close and the price gets protected and held in it. So these are the details of why sub-minute is very good too. And then if you wanted to project this, let me go back to 1 minute. 1 minute, that's fine. If you want to project this here from this retracement, this low up to that. Oh, I gotta fix this. Hold on. Put a projection fib on there. You'll see here that from this low to this high, we do break through it. So if you're asking where are you going, what's some confluence that I need, this is kind of, oh man, it's dark. It's at the 2 standard deviation. Let me just make it like dark as hell or something for you. All right, you see that? So with this retracement here, and I watched Friday's video, so I was also explaining some projection fibs as well. How far is it going to go? Well, again, we have the liquidity in this green, which is Friday's high. Then we have Thursday's high. So Thursday's high is right there. See that? It's I don't know why it doesn't show well. So it's right there. It's green right there. All right, that Friday high right there. I'm sorry, Thursday high right there. So my goal is, number one, to get in here. Number two, what do we have in here? Well, we have the bottom here. And once it reaches the bottom of this gap, you see that it does retrace back. It does hold. It does go back. This is an entry as well, but it's pretty much you're already at the top of price action of where we're going. So, but to see price hold, you'll see that this bearish candle, it does dip inside this little imbalance right there. If I draw it, I guess I could draw it. I mean, small, I don't want to really, but I'll do that here so you can see that. Just don't mind the color right now. But you see how it pops in here. So that's to show you the strength. It does retrace into it. This candle now protects itself and constantly does not sell below. So the price does come back up, and then this next candle retraces back 50% of the body of it. See, it's allowed to come a little bit underneath. An entry for me would either be right here or 50% of this down candle, or when it closes on this candle, this 9:41 a.m. candle, 1 minute. So if the 50% levels is holding, and then this price, this next one is this 942 shoots up, hits the 25% level. I guess I could do that too. It's just there's so much. I'll try to make this quick, man. I'll put this just like right here. It's not perfect. I'm just eyeballing it. Let me just do this. See this? See right here? No, I'm gonna make it darker, just so you can. What am I doing? So right here, you can see that right here, the price, this 942 candle comes above. Right here, closes above the 25% level. This is a target as well. Also, what do you have here? Besides this 25% level, you have this, I think this is a 1.5. Yeah. So let me make that dark as well. I hate it when it's overlapping, dude. See this level right here, this 1.5. This also comes right to it. See that? And then closes right to it, which is showing strength. So that's another key factor. And then price slowly comes up to the 50% as well. And then with this projection fib from this low to this high, what also has confluence? Well, this level had confluence with this 25% level of the gap. This 50% level, you didn't, I mean, in general, forget the projection fib. This is a general target as well, but you know that we want to get bodies above here so we can close with some body candles, 1 minute, 4 hour, 1 hour, 4 hour, or daily. So because this is a big gap, right? So that being the case, if you look at the 2 standard deviation right there, you'll see that it matches the liquidity with. That matches perfect, but it's close to the Thursday high. See that Thursday high, that green line? You can't really see it, but I'm gonna highlight it. That's why I have the buy from here to come up and this level as a minimum for me, only because it's that liquidity, and right above that would be the top of the actual gap, right? So nice confluence with the 2 standard deviations right there. See that? And that's what I go with. So what is it? If you were waiting for this 2.5 standard deviation, you would have missed it. You would have been fucked, and you wouldn't have been catch that sell. So you don't need to be perfect there. And this is just using the wick to wick. I like to use the wick. You can use the body as well. Put that right here. All right, and then right here, you can see that it comes to a 4.5, and it misses it. So if you do it with the bodies there, you'll see that it's literally shy. It's shy of it by 1 point, pretty much, right? So that's why you don't need to be right here. You don't need to be perfect either. So, anyways, but for me, this was a good sell because, as in general, we've accomplished pretty much what we needed to do here. Even though if I go on the 4 hour, you see there's a lack of body still up here, right? Which I'm going to get into in a second. Damn, how long has this been? Yeah, fuck, it's gonna be long. So we can still come up here, right? And then possibly get into here. I like this next 25%. This high quadrant of the 25% level of the entire weekly gap. We have a 4 hour imbalance. All it has to do is tap right there. That would be cool. If it doesn't, it doesn't. We might come into 50% of that wick right there on the 4 hour. Maybe tap underneath this low right there. So coming up here is possible. And then let me hold on. Oh, I wanted to mention when the price came down here and we took profit, I was done though. But I wanted to take this trade and I missed it. This ended up flying up. Now you might ask me why? Why didn't you take it? It's the same principle as maybe over here a little bit, but I could have got in because it taps this block, this down block. But this 1 minute candle just pushes up, and I missed it after screenshotting. I was like pissed because what I wanted to do. And I didn't care where it was going to go, but I knew it was going to come up here. And to give you an example, if you were bullish or bearish, you could have used this right here, the 50% level from this range to break in that range. I knew that we would retrace back up here. But because this was dangling right here for me, and I had already missed it, and I wasn't going to get that entry that I wanted, this was okay because I have confluence, I have price action, and I have a bigger target. But for here, this third trade, look what it ended up doing. It ended up going all the way fucking up here. Let me squinch it. Ended up coming all the way up here. That would have been amazing. But what I'm trying to share with you is that what my logic would have been if I caught it was to just catch it up to here. At this 50% level, this range, you have this gap right here. And look how it does tap the bottom of that up block right there. See that? See this high? It's the same level as that low of this up candle. See the low right there? The low is 14,397 and a quarter. This high right here, this high is 14,397 and oh, not a quarter. Oh, it missed it by a quarter. Interesting. I thought it hit it exactly. Well, either way, the point doesn't matter. The point is that look where the price went. So that's why I was trying to catch this buy and I missed it. And it could have still came down after that, or it could have still fucking went all the way up, and it wouldn't matter. But I was confident in this to getting to here. From here, I have no idea what's gonna happen. Look what it did. It retraced. It gave you a couple drives up, and then retraced, took them out, stayed inside that last wick candle. Look, I mention this all the time in videos. This up down candle. I'm sorry, this up candle. The wick itself is a down candle, and the algorithm will refer to it to squeeze people out. What else do we have here? We have the 25%, I'm sorry, we have the 50% level again of the yellow lines for the range. And then if you were to move this over, I'm just going to move it over real quick. If you move this over, this is a quad levels for the opening gap of this week. You can see that we are tapping that as well. But you didn't get that 50 there. So that's why this was why I like what I like the most. But yeah, man, I saw this buy, I was like, damn. And then when it came here, I was already done. But the beautiful buy again and came to take out that liquidity built and squeezed out. Look where it came. It came right to the entry that I have for the sell. Look to the right. And perfectly. So because they know they got high frequency traders and professional traders, getting money at these spots. So so when the price came down, okay, we said who was making money? All the buyers here, right? Took them out. When we were coming up with the logic of here, why are we coming up here? Because they're taking out the people who are selling, right? And then now we came up here. So what happens from here? Damn, I gotta make this video short. I'm not even gonna be able to chance to talk about Dow. Shit. Let's do it this way. With dollar, and then, as you can see that the dollar came down. I'm not sure if I showed you this. So that was my example, the dollar coming down. It did sit here. Does the dollar come down a little bit more? If it does, and it gets into like this weekly imbalance right here, and it holds as support, it could possibly come lower than here, or it can come up from here. But if it comes a little bit lower, then goes up. So if I do this with dollar, just talking here, let's just say it does this. If we're still in this mode here, then I'm going to expect us to come up one more time. And I'm not saying we can't keep going up a little bit either. There's plenty of nice areas in here. But because of the news and because of what we got going on, it could do a lot. So, it's just, but I'm just going to talk in general here. So if that's the case, then if the dollar example that I just gave you, then we could just, come up here like something like this, and then, head this way, right? You're even down here. But just for now, I'm going to leave this for that dollar example that I gave you. If that doesn't happen, go back to dollar. If that doesn't happen, then then I'm assuming straight up. I don't expect to blow this down here. But that is an option too. But if it blows straight up like this, then I'm going to tell you that we're going to blow straight down. Where were we? So, something like that. Now, if this is a bottom, right, and I'm not trying to pick bottoms here, but if this is like a good support area, and we do get a deeper retracement, and we end up being like short term bullish, then and you see this right here, but then I'm gonna say that we could retrace just a little bit. Well, let me go back to dollar. And then the dollar becomes bearish, then let's just do it like this. We'll just say that it's come a little bit lower here for support. I don't know. We already hit that. It's pretty nice, but I don't see this happening, so I'm just gonna put this option there that we just come up a little bit. I don't know. Depending here, from here to here, we don't know exactly, but let's just have something here. Then and then we're bullish, like and we November, December, we end up kind of like slowly grinding up because we want to get that bull rally, for Christmas and all that shit. Then we're gonna just dip from here and literally, it's possible that it can come up here with that high, taking out that high right there. Yeah, and I mean, I wouldn't put surprise anything that it comes down up to like this. And I know that sounds pretty extreme, but it's nothing for them to do it. I mean, and still be bearish, right? So if I have this range that I've got here to here, and we slowly grind up, again, this doesn't mean it's going to all happen tomorrow. I'm just giving you general ideas. But and I might be looking too forward, but at the same time, it's a new quarter, and we have 2 months left, and a lot can happen in December. But this is cool too, slowly squeezing out all the sellers here. This is a very big liquidity level here, but but right now I'm liking that too. So let me see if I can just look over Dow real quick and then be done, because this is way too long. Fuck. So real quick, Dow just bought up. I mean, this is simple, right? It just bought completely up. And what was the purpose of it completely up? Well, we had a daily imbalance right there. If you highlighted that, you could see on this daily chart over here. I highlighted it right here. Came right through it, but the previous day's high was also a factor. They want to take out liquidity from people buying, and then wipe out all the people who were selling. Balance price as well. So coming up here was pretty common sense. We've already hit lows, and we have a double. You also have a double bottom here on the oversold. So I was saying, do we blow through it? Remember, we opened up by gapping up, so that's showing you some strength. If it was going to be bearish first, then it would have came down and it would have sealed the gap, and then it would have came lower. But it didn't do that. It was, the strength was to the top side. And then you could see that here, that we never came back to it. 5 minute, just higher highs and higher lows the whole day. This was smooth if you knew how to hold this. And then if you could see obviously here that this is previous. Look at the sells that we were taking on Friday, right? I'm going to try to squinch this up. And then the liquidity of the actual day, equal highs right there, too smooth, too many, you can see that, too many levels there. See that? These two levels right there. Too smooth. And the price action is what do you call it? Liquidity. We didn't take out this high yet, but that's why I'm thinking we're gonna keep rolling up. But you'll see that it was just a straight bullish day. I mean, nonstop. What gave it away as well for this is that you didn't expect the opening range for the price to come back in. It wouldn't have made sense with this kind of structure, and they wanted people to buy, right? Because they're most likely just gonna start retracing after they take up some more liquidity above. But you can see the higher highs and higher lows here protecting. These down candles are protecting. So protecting, right? Protecting. Look, you can see it if I zoom in. This is a 5 minute. It's better on 1 minute. I'll just go to 1 minute. I gotta be done. But you'll see here, and remember and recall, we have this upper gap here, right? And algorithm is referencing that as well. And you'll see that there's a 25% level here. I'm gonna kind of move it over so you can kind of see it. Don't get lost with all this shit. But So the intention is when you're buying here, your intention is to come up here, right? I mean, you know what kind of levels we have up here. We have the first 25% here, 50%, 75%, 100% of the whole gap. You have the above it, which is the liquidity as well from there. Because remember, if you watch Friday's video, you'll see that we were tapping it. And then what's it called? Time of the day here. You see that we're constantly buying, and then look, 9:30 pushes up, gets falls short of this first 25% of the gap, but then we get two more drives up, right? So three drives total, right? Nice time to sell. If you're selling this, if you're buying this, you could have took this up into here, and then, well, and I know I don't have it. I didn't trade it, so I don't have it marked. But how you could have handled this, you could have just took this buy here, right when it tapped into this down blocks, these three, or not three, but could have did this a number of ways here. So I'll show you this in a second. These down candles right there. Let me zoom in. It's hard to not show you all this. But these two down candles were holding, and this price dips into there. You know, you could have got multiple entries. And then also you understand that as we're busting up here, it's the same idea with Nas, that we had this retracement from here to here. So if I measure, yeah, this needs to be moved over so you don't see that, so you can understand. So it was the same level, so it works out, but I would, you know, it's basically right there, but I'm just going to put it here. So from this low to this high, we're projecting up higher. What matches with this scenario? Well, we obviously come right in for the first standard deviation here. Profit taking from right here as well. But I mean, if you're looking for these levels inside here, you have the 1.5 standard deviation right here. Beautiful right there. That would have been it. And then if you waited here, it's fine, but you would have to have held it for three more drives. So when it retraced here, it does come back into this imbalance right here, and it does buy again. And you can see that clear. And then there's so much to talk about, I swear. So understanding that does now finally come to that 25% level, as you can see. And then you'll see that after the three drives here, and we do hit this 25% level, they do sell. This is a nice place to draw a fib and see the range of what you're dealing with. Sure enough, we sell from that 25%. We come back down and we get into a 70 level and miss it by a point, literally maybe point and a half. And then comes right back to where we bought. Isn't that funny, right? So, you know, again, when it's sold here, it's referring back to where did everybody make money at 9:30. This is right where it is. Now, I didn't take you out or anything, but they pushed you out. You know, I mean, most likely. I mean, if you held here, then you got real confidence. But yeah, sure. But and then after this, makes a new swing up, makes a new high, and then comes now to doesn't come to the 50 yet. And they're just creating ranges going up. So however you wanted to slice this, that was up to you. But if you were to do a middle level between this 50 level and this 25% level, which would be eyeballing right here, notice how it does come right to that area right here. And it would have been a nice. That would have been a nice from if you took a buy here. I'm sorry, I didn't put the sell here. For this sell here, this does come back and take liquidity with this sneaky candle. This is why people don't trade Dow, because it does love to go outside of the parameters of being clean and all that. But even though it's still working, they'll just do what they want. As you can see here, I could show you. You'll see the common thing here. Look, Dow just did what it wants. So, S&P is the average. This is generally who matched S&P. You can see that Nas matched more likely than an S&P, right? Dow just completely did what it wants, but they still did the same thing. They still booked price higher, right? So even though it retraced here, you had these divergence right here on as a higher low for Dow. We had lower lows with S&P and Nas, right? So this is also the reason why the bullish sentiment was still rolling in the day. This crack was nice to show that. So that's beside the point. But In general, what was I saying? Whoops. So what was I saying here? As far as this 1 minute chart, how you could have caught this is that if it did go above here, look, this is a third drive up. Knowing that and the price is sinking down and it closed here and this next candle retraces back up, you want to be, you can do a momentum sell if you push the button, right? Smaller time frames, you could probably see some, but just the basic idea is understanding that you hit this 25% level, Jesus, this 25% level of the gap. And then you have this range as well. So you're trying to sell into lower lows and lower highs into here and possibly get back into, well, the 930 that we mentioned that we took a buy from, but you could have took it. Let me just do it here like this. So this, you have to see this live, right? So this is happening. For me, if it's how I would have done this is just as soon as it's like right here, and this candle, if I'm on this 1 minute, right? Let me move this over. So when this 1 minute candle, which is the 957, when that candle it opens here and then it goes below its open, that's a change of state of delivery. So that means that it opened here and it had the right, it could have been bullish as it was going up, but it changes its direction and it comes down and then closes as a bearish. But as it's going down past its open, that is also an entry if you want to use that. And if not, you can wait for these bullish candles to close again, and then put your and then you just have a wider stop, or you could have changed this stop to 50% of that wick or a little bit above. Obviously, you don't ever want to put it at 50% levels exactly. You want to give it the next 25% quadrant above. But I mean, that's how you'd have to frame the risk. So as you see, we do pop back in, but your goal here at the minimum is a 50. That's a trade in itself. You could have took it to the 61 with underneath this buy right here. And then here was nice. Look at that. If you would have waited for the exact 70, you would have missed it, right? But you don't need to be perfect. You need to maybe you want to get it into this down candle at the 50% level. Let's just say you want it to go with that. The algorithm is going to reference all these things. You don't know which one it's doing though, right? But these are the logical places. Even if I was to just put this down candle, see that down candle with the wick itself, and that was it. Let's just say that's all you wanted. I got to be done, man. And then what? So this is a range here, higher high, higher low, right? You see that? So, and then you could have bought here, if you're still trading. This last candle here, even though it's not a down candle, it's a bullish candle. That wick acts as a down candle. So you can see that the price comes right back into it, goes below 50% of it. That's why you can put even a limit entry at 50%. Sometimes you don't get it though, right? But if that's what your model wants to be like, then put a limit, a buy limit right there, and then your stop loss is right there. So where are you taking this? Well, generally you want to take it above this high if you know that you want to get in back up here, wipe out liquidity, back into that daily imbalance. You're still going up. You're using the projections here as well. What do you have here from this retracement? The projection now, you have the 2 standard deviation right there. Look how it does go to it, goes past it. It falls short of that 2.5, right? So that could have been a way you did it here, or if you did it here, but look how it retraced all the way back. So with that being the case, I mean, just keep it simple and take the profit there. That's all you need. This is fucking 100 points, 100 points, 100 points, dude. That's So this range here you got now, what does it do? It comes to the 70 again. And comes right below the people who are getting in there, whoever bought in that imbalance right there. Yeah, dude, I cannot make these videos shorter. I'm gonna have to do something different. I can't talk about 2 at the same time. But does come, right in 50% of it. You can see they're pretty much sitting there in between that. That's a nice buy right there as well. Coming to the 70, and then just momentum there. That candle holds, and I could keep going and stuff, but I can't. So look at this, fucking price shoots all the way up. So, look up here. Let me go to a 5 minute, man. I don't know how else I can um take a look at this. Price from this retracement here, the projection, it literally hits the high of the day. And at 6.5 standard deviation, 33094. This high right here, what's the high of this day? Look at this candle right there, this bullish candle. Look at the high up there. 33094. That's the same exact number. Came to right to a 6.5 standard deviation. So in this scenario, I mean, if you're still holding, I mean, I doubt it. But getting into this 5 standard deviation and to hitting the bottom of this daily gap, daily imbalance right there. Nice. Many ways to do this. So and then bullish candles completely holding on the 5 minute. See that? Look at that. So all entry models as well. And yeah, man. So let me see. Other than that, what I said for Dow, what I said for Nas is the same thing for Dow. So can we possibly come up a little bit higher here? Possibly get into this. Maybe wipe out that liquidity. Maybe even seal this with the news coming. I don't know if it's going to go up like that real quick and rush for it. I mean, can we sell from here? Sure, we could. We could sell from here, but I don't see that. I do see it coming a little bit higher. It's a 4 hour, so it can get into 50% of this wick right here. Getting back to the old week gap right here. That's the old week high. I mean, if I was to make the market, and if you look at this, look to the right. Let me just do this. Let me just do that. As you see, the previous month, we're gonna start November 1st. So that might push up the price to get to this blue line, which would be the low of not October but September. And then that's this blue line all the way. I like that too. I mean, look at that. That would be nice. Coming straight for that and then coming down. Did I? Oh, similar to Nas. So I don't know if it's gonna go this high though. This is just an idea. It doesn't even have to. It could come right here and sell. It could even just come right here and sell. Okay, or we could just sell from where we are now, right? I don't know. So other than that, I think I am done here. You guys take care till tomorrow. God bless.